Investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard. Things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continuing.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye.
Money's coming to me.
The chart.
Money's coming to me.
And welcome. Okay, so today we had the rate cut. I just have to get my chart up here. Will you get the chart up for me? So we got the rate cut, but it's not going to mean much. It really isn't. And remember, rate cuts, just because you get a Fed rate cut, there's going to be disappointment. It's not an automatic that, hey, this is good news. Mortgage rates are going to go down. My 30-year or I can refinance my house. I can get a lower mortgage rate. It doesn't work like that. It never does. So you can get the Fed rate to go down, but it doesn't automatically bring the 10-year Treasury yield down. That dictates what you're going to be paying in interest, not only on your mortgage, but on your car, your business loan, that sort of thing. So again, there will be disappointment. Now, it's too early to tell if the 10-year Treasury yield is going to climb like it did last time. We're not sure yet, and we just have to give it another day here before we can see that. So again, the 10-year Treasury yield is important. There's no question about it. But what we need is to see if this thing can again hold itself together. Now, all right, last year, as we know, when we had just the opposite happen. The 10-year Treasury yield went the other way. Now, it doesn't mean that can't happen this year. It can. The yields can start going up tomorrow. So this game isn't over yet. It's just not over yet. So the Fed rate. Again, any of those people who are looking to purchase a home and are all excited, and I'm going to get this 25 basis point rate cut today, they're all excited. Remember, while the Fed rate cut impacts the long-term 10-year bond yield, it doesn't determine them. And the rising 10-year yield, many times, as I said, people get really upset because they say, wait a minute, look at the mortgage rates, they're going up. Well, what the hell happened? The Fed cut their rates. What's going on here? So right now, and here's why that happens. When you see the Fed rate cut, but the 10-year Treasury yield doesn't come down, so your mortgage rates don't come down, the interest on your business loans don't come down, interest on your credit card don't come. What makes that happen? If I get the Fed to cut their rate, why doesn't the 10-year follow? Because remember, again, it's independent, and it doesn't. The Fed has no control over the 10-year. It has influence, but no control. So here's why that occurs: bad monetary policies by the Fed. That's it. So anytime you get a Fed rate cut, and you start saying, wait a minute, the 10-year Treasury yield is going up. That means I'm paying more on my business loan, my car loan, my mortgage. Hey, what's going on here? It's because of bad monetary policies. Their policies have resulted in rising inflation. And rising inflation destroys, as we know, the working and middle class, especially the middle class. It also, remember, creates uncertainty about the Fed monetary policy going forward. Remember, the Federal Reserve is not known for being very smart. The Federal Reserve, most of their policies fail. Janet Yellen, remember her? Transitory, inflation transitory, right? Remember that? We very seldom ever had anybody in the Fed that did a good job. The Fed overall has a bunch of nincompoops in it. None of them are business people I know of. They don't understand the real world. And the policies they make are inflationary. Give me an example of how stupid these people are. Anytime that there's uncertainty about the Fed monetary policy, that's bad. And there's very little confidence in the Fed, the big money, the institutions who drive the stock market, who make your stocks go up, make your stocks come down. Very, very seldom, okay, do they have any confidence in the Fed. Example, Powell just put an end to QT. Now remember, QT started in June of 2022. We just ended it December 1 of 2025. What he was doing is draining out the 2.4 trillion, all this money that they created by increasing the money supply, which created this tremendous inflation, and why we can't get back to the target of 2%. Now, out of the financial system, this money comes. So they drag 2.4 trillion out of the system. Now, banks, large and small, like Bank of America, Charles Schwab, they're a bank, one of the biggest banks, USAA Bank, they're all starving for cash. They're all starving for cash. They don't have any because they drained 2.4 trillion out. So without that cash, it's not that their banks are going to go broke, okay? They're not going to be insolvent. They just can't operate, okay, in a manner that they normally do with loans and so forth. It's just not good. So some of the smaller banks and these largest Wall Street banks in 2020 did something very, very stupid. And I don't know how they could do something this stupid. Like I laughed yesterday about how you see all these ads on TV about the bankers and let the bankers help you and with your retirement, come to this bank and that bank. We're here for your future. Think of what these dopes did. In 2020, they purchased treasuries. But they purchased them at a fixed rate of about 2.3%. What are they, nuts? Who would buy a treasury with a fixed rate, knowing the history of stock buybacks, increased money supply, everything we do, the inflation, we can't get it down to where we want it. Who in their right mind ever say, oh, I'm not going to worry about inflation. I'll buy those treasuries from you. Let's fix them at 2.3. No, there's not going to be any inflation. When inflation's been all around us since 2008. That's all we talk about every day is inflation. Well, they nuts? Not considering inflation? So here's what happened. Under Biden and Harris, our inflation went from 2.3% to 9%, and these guys were locked in with treasuries at 2.3%. So we had to raise rates to fight inflation because we went from 2.3 to 9%. So we started to raise rates, and these banks lost $600 billion. These are the banks you go to. You know how they have, I love at banks, they call their departments trust department. Who the hell would trust a bank? Trust department. I always laugh at that. You go into a bank, you see a big sign, trust department on the 27th floor. Trust department? I mean, any banker that made this decision is insane. You got to be totally stupid. This is just crazy nuts. So when they now here's what really happened. When the Democrats passed the Inflation Reduction Act, they knew it wasn't an Inflation Reduction Act. How did the banks not know? Did anybody at the banks read the Inflation Reduction Act? Here's my guess. The banks always back the left. They always back anybody, every president that runs it's a Democrat, boom, they get the bank money. Clinton gets the bank money. Mrs. Clinton got the bank money. I mean, Obama got loaded with bank money. It's the way it works. They don't give money to Republicans. So the scam was, let's call this program the Inflation Reduction Act. It's the same old thing like, if you hide in the open, no one will see you. So they said, look, this is the most inflationary act that we're going to ever pass. But we'll call it the Inflation Reduction Act. That's what they did. And these banks, were they that stupid? No, I don't think they're stupid. I think they couldn't. They had no choice. They had no choice because they funded Harris, and they funded. Well, actually, the big money went to Harris. Okay, that's where the big money went to Harris. At first, it was going to Biden, but it went to Harris. So they couldn't openly turn around and pull their support, or they couldn't openly say, wait a minute, this Inflation Reduction Act is a bunch of BS. It's all inflation. Now, let me explain why it was inflationary. And then we'll get back to what's going on in the bond market here. The one thing you shouldn't be doing today is buying stocks. If you're in stocks today and we're having this rally, I told my members this morning to watch the bank stocks and to watch, especially Goldman Sachs, we're in that. And I also told them to watch bank stocks, and I told them to watch tech stocks. But I'll get to that in a moment. So how can the banks weren't deceived? Now, they knew the Inflation Reduction Act. They put, I'm laughing, it's so funny. They put price controls on prescription drugs. That has that's a significant impact on rising inflation. Once you start doing price controls, inflation goes nuts.
3 minutes.
Increase corporate taxes. Corporations never pay taxes. When they decide to increase corporate taxes, they're increasing taxes on everybody on Main Street. Corporations, if you're going to buy a pair of Nike sneakers and the prices go up, they don't, and they say, well, we're going to tax Nike now. We're going to increase the corporate tax on Nike. They don't pay it. They just take the sneakers and raise the prices. The third one was this was the big one, the large green energy programs. They were huge. The incentives that they aimed at reducing greenhouse gas emissions, that cost us a fortune. So those three things drove inflation. So how the hell could these bankers go in and buy treasuries with a fixed rate at 2.3%, not thinking that these things aren't going to create inflation? Another reason why they did it, one is they're not going to come out and say they don't agree with the Inflation Reduction Act. They're not going to say that. Of course they're not going to say that because they got all their money behind the White House, Biden. But again, I think they just put themselves in a position, hey, we just got to go with it. And don't worry, we'll get a bailout from the banks or the Fed. And that's what happened. So what's going on now is $600 billion in losses is going to be taken care of. These are considered unrealized losses. I mean, they're real losses, okay? But they're going to mask it. They're going to mask this deck, and they did. What they did is they printed, now here goes the inflation again, and this is a form of QE. We just got rid of QT, and they started QE in November, but they don't call it QE. Remember, I said this would happen? I said they're going to go, when they stop with QT, I hope to find that cut. I said when they stop with QT, they're going to go right to QE, and inflation's going to go up. And sure enough, the Treasury printed $35 trillion, and they took the $35 trillion and they put it in the repo market. They did repo agreements, okay, repurchase agreements. They went to the banks and made a deal with them and said, look, you guys are upside down by $600 billion. Here's what we'll do. We'll buy from you all your treasuries that are upside down, and we'll buy from you all your treasuries, mortgage-backed securities, and all you got to do is sign an agreement that at some date in the future, you will buy them back from us at a higher price than we even bought them at, so we can make a profit. Now, they never will pay them back, but that's what went on. This is why we have such a problem with inflation. Now, the next problem is going to be the corporations. We'll talk about that, and then we'll look at the stock market. Be right back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
Hi, I'm Phil Grande of philsgang.com. You know, over the years, I've successfully taught tens of thousands of investors how to navigate the market with confidence. Become a Phil's Gang member and receive the training, the advice, and the software that will take your investing to the next level. You know, I have a team comprised of successful investors, all with proven track records. And Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy, when to sell, when to hold, when to run like hell, even short. Learn about common market mistakes and how to minimize them. You don't have to be a seasoned investor to benefit from Phil's Gang and platform. No matter what level investor you are, my strategies for investing are designed to put you on the path to success. Sign up for the 10-day free trial to see our platform in action. Avoid market pitfalls and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
And welcome back. Okay, so let's talk about what's going on with the bond market. So, again, this rate cut is not enough. It's not going to work. You eventually see the 10-year Treasury yield going back up instead of down, because a quarter point is just not going to do it. It's just not going to happen. A quarter point. If 50 basis points into it a year ago, why on earth would we think we'd be so lucky that 25 basis points would do it? It's just not going to. I mean, the consumer is really hurting, and corporations. Let's talk about the corporations for a moment. But first, you know what I want to do? Let me play this cut here. This is what really got me right here. This got me. Yesterday, I listened to President Trump.
We're bringing those prices down rapidly, lower prices, bigger paychecks. You're getting lower prices, bigger paychecks. We're getting inflation, we're crushing it. And you're getting much higher wages. I mean, the only thing that's really going up big, it's called the stock market and your 401ks.
All right, the problem with that argument, the stock market, the 401k, if you take a look at what QE did to us between 2008 and 2012, inflation increased by 6.6%, but wages only went up 2.7%. Now, between 2020 and 2025, inflation was up 8.5%. Wages are only up 4.3%. Now, let's talk about corporate debt, corporations. Now, Powell started to drain $2.4 trillion out of the financials, right, out of the system. But here's the real problem that's coming. Companies are now facing $2.3 trillion in debt. It's all coming mature now. Okay, between 2025 and 2026, they got to pay back $2.3 trillion. Now, that means no more stock buybacks. They got to start acting like corporations again. They have to start working with their balance sheets to face this. The valuations, stock valuations, are very, very much stretched. Stock prices are higher than earnings. And the stock prices are not aligning with our valuations. And again, high prices are also an indication of valuations, again, are stretched. Now, CFOs and CEOs, remember what they've been doing. They've been borrowing. They borrowed $10 trillion at zero interest rates or near zero interest rates since 2008 to now. But now they're going to hit that wall. It's got to be paid back. They got to put almost $3 trillion. It's got to be paid in 12 months, 25 to 26. How are they going to do that? Well, first of all, they're going to stop doing stock buybacks, so that's going to hurt the market. They have to. Because again, remember, the stock buybacks for them has artificially pushed earnings up without having to increase sales. They didn't have to increase earnings. They didn't have to increase profits. They've been sitting there, just enjoying their stock price going up, getting very, very wealthy. Once this used to be a felony, what they're doing, but no more. It worked terrific for them all these years. But now comes the debt wall. If you take the top 100 stocks, the buyback ratio is starting to tank. We already see it. It's down about 15%. Because they got to get back to their balance sheet. When you have this kind of debt and you're a CEO, you got to stop playing this game, stock buybacks. Because all stock buybacks are, you just keep reducing the number of shares you have outstanding, the shares that you and I trade every day. So if you have 1 million shares, you reduce it down to 900 shares, your earnings go up. And then it pushes your stock price from $50 to $70. But you didn't sell anything. You didn't make any earnings, any profits. It just went up because when you say, I'm going to reduce the 1 million shares outstanding that everybody trades every day, buy and sell, I'm going to reduce it to 900 because that way now my earnings will go up. And that'll push my stock price up, and I don't have to do anything. So so with them facing this debt, have to stop with the stock buyback because they're in real trouble. How are they going to pay this debt back? So that means that's when you start seeing the debt bubbles pop. And that's what's going to happen. But you know, what's really interesting, none of this means squat if you know how to sell short. The only answer that you have to protect yourself in a stock market is sell short. But Wall Street scared you to death. You're going to lose your firstborn, you're going to go blind, because they don't want you to sell short when the market's going back down. Remember when Enron was going back down? First went up, and Enron was above all its moving averages, the 200-day, the 50, the 100, all that support. And then all the way up, they had, they were buy recommendations, buy recommendations, all the way up, buy recommendations. But what do? When the stock market, what did Enron do when all of a sudden we started to see Enron starting to collapse? What they always do, in other words, they run up this on the upside of a stock where they have buy, which makes sense, the trend's going up. Okay, they run it up with buy recommendation. But when the stock starts going down, they don't change that buy recommendation. That's right, they don't change that buy recommendation. They keep that buy recommendation on. And what happens? Well, then you get really screwed, because by keeping that buy recommendation on all the way down, so in other words, if you have a stock that's, let's say the stock's going up nicely, okay, for you, okay, and you're doing really well on the way up, and you look, gee, they got 3 buy recommendations, 6 buy recommendations. Well, this is good. You get to the top, like Enron, all of a sudden, or like NVIDIA. Remember NVIDIA went down? Now on the way down, you wonder, well, why aren't they changing it to a sell recommendation? The stock just dropped from 552 down to 476, but they still have buy recommendation. What the hell's that? Well, that's because they need you to keep the stock market up. They need you to buy on the dip. They need you to buy in a downtrend. You only buy in an uptrend. You only add to your position in an uptrend. But they, by making sure they don't change their buy recommendation, it was perfect on the way up in the uptrend, but by making sure they keep the buy recommendation as the stock, like Enron, was tanking, going down, they can convince you to buy on the dip. And the reason they get you to buy on the dip, it holds the stock up long enough for Goldman Sachs, Morgan Stanley, JP Morgan, okay, Bank of America, to get their institution players out. Because remember, they make all their money with institutions. San Francisco Fire Department pension, Boston Fire Department pension, New York Steelworker pension. So they got to get them out. Now, if they didn't keep that buy recommendation in while the stock's going down, everybody would just pile out. The stock would go down in a couple hours. It'd be over. But they can keep that stock, like Enron, going down for months. Because why? Because you always come in and you buy on dips. Every time you buy in a dip with a downtrend where they have a recommendation, buy, that's what they're doing to you. So my point is that these guys aren't here to help you, okay? Let's get to the. I want to talk about this here. What Trump was saying here again.
We're bringing those prices down rapidly. Lower prices, bigger paychecks. You're getting lower prices, bigger paychecks. We're getting inflation. We're crushing it, and you're getting much higher wages. I mean, the only thing that's really going up big, it's called the stock market and your 401ks.
But wait a minute. The stock market, 90% of the money that comes out of the stock market, the profits come out of the stock market, 90% of that money goes to who? The top 10% of the population. That's it. That's it. How about 401ks? 28%. But wait a minute, you don't trade your 401k. You don't trade your 401k. You have somebody doing it for you. And what happens? When the stock market goes down, they're not allowed to sell it short. They're not allowed to sell it short. Oh, no, you can't sell it short. No, that's the rule. You can't sell it short. So as the market goes down 20, 30, 40%, you lose. But they convince you on the way down to keep buying more. But going back to the point, wages are not keeping up with inflation. That's not true. Look at the application denials. The application denials for mortgages, the rejections, are up 46% for refis. For refis. Mortgage applications, rejections, just for regular, you go and get a mortgage, right? I'm not talking about refis. 25% rejections. Autos, 15%. Credit card applications, 21%. What? I don't understand. We have record job losses. We had 1.1 million year to date, since January 1st, 2025 to today, December 10th, 2025, we lost 1.1 million jobs. Mortgage delinquencies, car delinquencies, credit card, 17-year high delinquencies, repossessions. Are you kidding me? Paycheck to paycheck. People living paycheck to paycheck. Look up these numbers yourself. They've increased from 46% to 68% in less than 24 months. What are they talking about? The labor market. They say more people are working now than ever before.
2 minutes.
That we're at a 3-year low. Now listen to this here.
The types of debt readings that we're seeing, we see 5 hyperscalers have grown their debt. We're talking about everything from Oracle to Meta, 14%. That's about in line with their revenue growth. That would probably be twice as high, right, if this was just a runaway bubble in debt in terms of those company spending.
Now listen to this one.
The number one topic investors want clarity on is Oracle's financing plan. How does it fund this mega data center build out with its debt already exceeding $100 billion while also holding on to its investment grade credit rating?
How? Because we're going to do it. That's right. The taxpayer's going to do it, just like we did with what the hell were they? The solar panels. Remember? We bailed those people up. Now, again, you got just a handful of stocks that are holding the whole S&P 500 up. Only 10 stocks are really making earnings. That's it. 10 stocks. 10 out of the whole 500 have real earnings that you could say are real good earnings. So, the reason the bankruptcies are up is because wages can't keep up with inflation. Food costs at home is up 24%.
30 seconds.
That's insane. And the only jobs, the big jobs that are out there are part-time. Everybody's going from full-time to part-time to no time. We have 2 big employers, that's it. Auto industry, real estate industry. But that's not enough. We 170 million is our workforce. Only 10 million is auto, and only 3 million is real estate. So let's talk more about this tomorrow. I don't agree with what they're saying at all. Buy my stocks, learn how to sell short.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.